Hello, and welcome to That One Idea, a podcast series chronicling early stage founder journeys, brought to you by WaterBridge Ventures. Through this podcast series, we hope to bring out the founder moments and journeys that lead them to starting up. We highlight the humans behind the founders as they blitz through the 0 to 1 scale journey and transition their ideas into scale-worthy businesses. These conversations reveal the unique spirit and talent of these incredible founders as they share their vision of who they are and what they're building. In today's episode, we have Anjali Sosale of WaterBridge Ventures chatting with Rahul and Nikhil Boggaram of Yellow Metal. Yellow Metal is an asset-backed credit company that disburses gold loans in less than 30 minutes, all in the privacy of your home. Focused on rural India, Yellow Metal seeks to provide low-cost loans to small farmers and business owners who are otherwise not part of the formal credit ecosystem.
Hi Rahul, good morning. Hi Nikhil, and please welcome to the WaterBridge Ventures studio here this morning. Thank you so much for coming all the way and super excited to be having this conversation with you.
Hey, hi Anjali, good morning. Great to be here. It's a pleasure always talking to you.
Hi Anjali, good morning, very good morning. It's great being here.
Awesome. Yes, I am excited. So we last sat down for this podcast in season 1, a little over 15 months ago. It was December, January, I remember last year. You had just closed a seed round of 500K with us. And what an amazing 15 months it's been, right? You were pretty much just an idea stage company. You were just like a PPT. I would say Nikhil, of course, was born. Both of you were born and raised in Chintamani, but Nikhil was running a pawnbroking business offline. And Rahul, we know the story about going back during the pandemic and how the origins of Yellow Metal came up and the backstory to that one idea being Yellow Metal. But if I just ask you to quickly describe what these 15 months have been, and how have you so both frugally as well as amazingly scaled with just 500K of a fundraise to 4 million AUM, 7 towns, opening more than 500 accounts each month. What's been that secret success mantra for you? And take us through what the last 15 months have been like since you raised that 500K seed round.
Yeah, when we started out, it was as good as an idea. Nikhil persuaded me that I quit my job and only look at Yellow Metal as an opportunity for a few months till we could get a banking partner come on board. So that was great to start, but however, we still needed money to help us spend quality time on this particular idea, which is when WaterBridge and all of you helped us pull in a 500K check where we could focus on the business specifically after that. We started out with one town, which is our hometown called Chintam, about approximately 75 kilometers away from Bangalore. It's a tier 4, a fundamental, a typical town that you would see across Karnataka. And it's a population of about 2 to 3 lakh across, including the village population around, which is about 100 plus villages in the vicinity of 20 kilometer radius. So that's how we started out. And yeah, eventually we learned all our goods and bads from that one town operations for about 3.5 months, and then looked at expanding beyond that. So yeah, that's how we initially started.
Yeah, and if I have to switch to Nikhil, I remember one of the unknowns that we put down at the time of investment was the whole trust factor in rural, especially given this is lending and lending against gold jewelry, which is the most prized asset in possession of a rural household, right? But of course, looking back, you've managed to open 1 branch every alternate month. You're at 7 branches. Now your ATVs are as high as 2 lakhs, constrained only by the UPI limits and nothing else. But any insights into what made these rural consumers trust Yellow Metal being a new entity? Was it the differentiated customer experience with the disbursements? Was it the way in which you went about collections? Or was it the transparency with pricing? I'm sure it's a factor of all of this. But what do you think was key to win the trust of this rural consumer base, being an absolutely rookie?
So we would say tier 4 consumers have a lot of gold, and being at the right place and at the right time with the right pricing has made a dent in the business. So I would say right price with the right time and the right location, leveraging technology regarding UPI or maybe Aadhaar has made penetrate all the markets.
Yeah, and Rahul described that these towns are typically, super small, agri and small traders is the core of the economy. But as you started out with Chintamani and you took your learnings from there, Rahul would love to actually know and describe that tier 4, right? Because a lot of founders keep saying they're building for Bharat, but these are like truly not even tier 2, these are true tier 4 towns. The nearest banking branch is possibly like a 15-kilometer auto or a bike ride away. But take us through how you decided the town expansion playbook and just begin by just describing the typical economy and why these consumers borrow to begin with.
Most of our consumers are, like you rightly mentioned, farmers, agri-traders, people depending on small businesses like a kirana store or maybe a textile store or a pharmacy store. This is predominantly how any tier 4 economics would operate, right? These are the businesses that run there. Fundamentally, they've all run in form of cash for a long time because banks have just penetrated, maybe they're starting to penetrate now. Technology is starting to penetrate in the last 3 or 4 years because of UPI and bank account readiness for subsidies like Jandan accounts. And then also with Jio's penetration and making the internet super cheap for them to access. This has made all of them come online in some form or shape. But before that, all transactions were always in form of cash, however small or big they were. This made us interested in focusing on towns of this nature because now they are visible to us to help them with any form of technology that we could build. And when we looked at the kind of market sizes were astonishingly big because coming from family background of pawnbroking, we realized there are nearly 100 plus pawnbrokers in a town like us. And each of them have loan book that is unorganized in nature, but north of 1 crore plus. That by itself is a massive market that we realized fintechs will fight for. And however, there were no banks were not even looking at this themselves, forget fintechs. So that became a ripe market for us. The population being about 2 to 3 lakhs and loan books varying from 100 to 300, 400 crores per town was a big factor for us to focus on markets like this. And of course, the UPI bank accounts were a big advantage to focus on these markets. So that is the core area where we'll continue to focus.
And one thing we spoke about trust, Nikhil, and we are also seeing the first full cycle. Your loans are typically 6 months, so we're seeing the first full cycle of repayments and renewals. And a big positive for the business has been the high renewal rates. And so it goes back to that previous question about high credibility, trust, and transparency in pricing. But obviously on the ground, you've been doing the execution and getting the execution really right for these folks to come back. Again, a little nudging you on the behavior of these borrowers. Why do they keep coming back every now and then? Is it like economic event? Is it to purchase seeds? Is it to maybe pay for school fees or daughter's marriage? But it's very typical to use gold as the first source of credit in a rural household. But they keep coming back to yellow metal. So what has some of your experience been with your repeat and your high renewal rates, given that we're now seeing, like I said, the first full cycle of repayments?
I would say customers have a lot of clarity before they enter yellow metal, which they never had with any kind of NBFCs or even banks. The right pricing, what I would say, or fair and transparent pricing, which makes them comfortable to keep coming back to the same company again and again. And with using gold as a collateral, yes, this is the right way. I mean, people are asset rich, but they're not leveraging anything. I mean, India has a lot of real estate and gold. Real estate is hard to realize for short-term cash, whereas gold is highly liquidable and it can be used to leverage. They're just leveraging it with the right company. I mean, I would say people are very comfortable. Before they come to you, they are fairly transparent and very clear that they got clear pricing with the right structure, and they are fairly easy to communicate with the company.
So what you're saying, Nikhil, is that they are familiar with the asset class. So these are customers who are deeply aware and even of the details, I would say, and they're aware of the pricing structure that the NBFC incumbents are offering them in the market. And so it's not so much customer education and awareness in this business, but it's more about taking an existing playbook of, say, a Muthoot or a Manappuram and doing a little bit of digital and tech-led enablement through your eKYC. You spoke about, Aadhaar. Your entire loan agreement is like an end-to-end process. It's signed. You have a mobile native LMS. But fundamentally, it is an aware customer, aware of the competition, aware of the pricing, and still choosing to trust a new brand like Yellow Metal, and not just trust with a one-time loan, but come back 6 months later for a repeat and renewal, right? So if I just ask you to weight, how much of this is the tech-driven ease of doing business, therefore, with a brand like Yellow Metal versus customer service and pricing? Like, how would you stack rank that? Like just order of priority and like you always say it's the magic is because it's a beautiful combination of all. But the other surprising fact has been the adoption of this same TAM to doing, digital KYC, digital disbursements, repayments we're seeing is happening through, digital payment gateways and WhatsApp reminders and UPIs. But what combination of this has made this, turn into a flywheel?
So tech, it's not only from the customer's perspective, it's also from the operations perspective. If you could take any of the banks or any NBFCs, they lack a lot of operational things in tech. They're highly dependent on tech on a manual task, very simple, basic manual task. So tech is helping us in operations. I mean, the back office or back end operations. And from the customer's perspective, they are finding it very comfortable. Why have user IDs? Why have passwords, alphanumeric, all these things? It's basic, simple phone number and OTP. That's make the edge. That is how we would see. Any of the incumbents, their digital adoption to an app is just 20 to 25%. Whereas with Yellow Metal, it is currently at 75%, and we are hoping to increase it.
And Rahul, as you set out designing the tech, any things that surprised you with adoption? Because you're the one who literally, drew those Figmas yourself in terms of how you wanted UI to be, what should be the login screens, what should be the communication on the home screens, etc. What surprised you and what were you always sure about?
No, fundamentally, when we started Yellow Metal, our intention was two levers, like what Nikhil was saying. One, make everything, the full process digital, which means operational part has to be very simple enough so that it can happen on a mobile phone, not at a desk where a manager is sitting for hours and waiting for servers to load it, right? And the second part is the consumer who currently is using a ton of apps on his phone. He's on YouTube 2.5 hours a day, and he's continuously looking at memes, etc. and Facebook, Instagram, share chats, whatnot, everything. But he just doesn't use finance on app today because nobody has made it friendly for his products and his kind of consumption. What we looked at was if you were to use a YouTube today, you don't really need a lot of things, right? You just have to have the app and have a phone number for most of the apps that you would use and just get an OTP and sign up to it. You don't really have a username or an alphanumeric password and don't think about it like a very scary thing to do, which is what the mindset of a finance is. And that's how banks and many finance players position it. And we wanted that to be fairly simple and straightforward. That was the very first intention, right? The second thing was how do you borrow the simplicity to the product itself? When we looked at the product, they were so complicated. If you look at NBFCs today, 26% is the average net interest rate that the companies earn. But if you look at their advertisements on their hoarding boards or their website or televisions, etc., they'll start saying the loan is made at 0.79%, 0.89%, which is about 7%, 8% per annum. But that's not exactly what they're making out of at the end of it, right? Which is 26%. There's a big gap in between, which they're leveraging because there is nobody who is being transparent about anything that they charge, including the banks for that matter. They charge you a valuation charge of 1,000 rupees. Then they charge you a SMS charge of about 2 to 3 rupees for every SMS. And which world are we in today, right? Like, who really is looking forward for paying for an SMS? And why don't they send notifications on time? I still don't get it today. I myself had double loans across all these organizations. Not a single time have I ever got a notification. I've never not paid my credit card dues in time. And I have actually defaulted paying my gold loan in time. And if I can do it, who is probably one of the most organized guys on the finance side, imagine a farmer who is probably not that organized, who is not getting his cash flows in time. How do you make sure he is actually informed on time? How do you make sure he is looking the product as simple as borrowing from a pawnbroker? A pawnbroker tells you it's a 2% interest rate. It remains a 2% interest rate. He doesn't charge you a valuation charge. There's no, a processing charge involved. There's no SMS charge involved. There's 21 charges that I know of on the gold loan side doesn't exist on Yellow Metal, nor does a pawnbroker charge. That's the transparency and simplicity we wanted to build, not just on the product side, but also on the tech side, right? You have your phone number, you have that SIM card installed on your app. That's pretty much you need to access a Yellow Metal phone. And we will extend that to the loan manager as well, right? You have your phone number, it is whitelisted on our admin portal. You can just go ahead and simply create a loan. It's that simple. And all the KYC, etc. sounds very digitally heavy in nature. However, it's as simple as what the screen will tell them to. If they know how to read, that's pretty much that they need to do to create a new loan.
Yeah.
So simplicity is the foundation of all.
I think what you've managed to build early on is this phygital model or this omni-channel model, as I would like to call in core terms, where Nikhil has built out this branch-led playbook where you open up just one branch office in each town. It's literally a super small 200 square foot office. You spend a couple of lakhs on capex. You hire your first 2 loan managers, and then that layered by this app. And the app is not just a consumer-facing app, but you also built this LMS system on the back end that enables these loan managers who are on the ground to just be feet on street all the time and digitally enabled and have information of both their customer accounts as well as their disbursement targets on their mobile phone, right? But tell us a little bit about this industry first mobile native LMS, Rahul, that you thought through very early on in order to make your branches and your loan managers significantly more efficient than their banking and NBFC counterparts.
When we initially started out, we started with as simple as a Google form on a mobile phone. A Google form was simple enough to load on a mobile phone, and we had 10 fields on the mobile phone of whatever the loan data has to be collected, and that came to our backend systems to look at it. But when we started scaling up beyond one town that we operated after 3 months of operations, we realized all the loan management systems or the core banking systems that existed are extremely bulky. They're not thought through any product in detail at all, and they're built for everything but for nobody. That's exactly how we looked at any loan management system that we explored, right? And potentially we have probably explored everything that is available in the market today. And there were maybe 1 or 2 that had a very focused approach, but nobody had a product that was specifically built for a gold loan, and definitely not for a mobile phone at all. And they were all built for like a proper website kind of or a web app kind of an approach where it is loaded onto a desktop kind of a system. So very early on, we realized we didn't want an office or a person in our office sitting on a table and working through a system to get a particular task done. Because at the end of the day, it's a task getting done. He should be able to do it on a mobile phone because that's what is a platform that people are familiar of. We didn't want to train people on board. So mobile phone was our first approach, which is why we built a native mobile loan management system ourselves. We knew it was going to be a time-consuming one, but it would pay off in a long run. Second was we didn't want anything to do on a desktop whatsoever, not even on the consumer side. So we do have a website, but that's more of a channel to know the product. But beyond that, mobile phone is where our consumers are as well. So those were the 2 important steps that we did. Any feature that we build has to be from a mobile-first perspective. And any admin system that we build, which is for our loan manager, will also be similar to our consumer. So if we give the loan management software or an app to our consumer, I am very certain that he'll be able to create the loan in less than 2 minutes. So because he already knows how a gold loan works. That was the first principle.
And Nikhil, on the branch opening side, your strategy has been to go wide. And as you mentioned, you started with Chintamani. Today you're in 7 towns. Given that all you had raised, which is 500K, you opened 7 bank branches and took the business to 4 million in AUM. But how do you decide and select which branch to open next? Do you do a competitive mapping? Do you see where the nearest banking partner of yours, where their branch is located? Potentially pick a place where the Muthuts and Manappurams are also present. But given that your strike rate has been high and you've reached a 1 crore disbursement criteria pretty much within 45 days of opening every branch, and now you've done this 7 times over. But what is that playbook that you have used to decide which branch comes next? And first and foremost, why do you fundamentally believe that you need to go wider? You need to have an established branch presence in at least 50 to 100 towns to really be able to create a formidable financial services brand.
So we approach cluster model. So once we start a new town, we hire 3 to 4 people in one town. Once the new branch is established, we ask this one person in the previous town to move to the new town, so that he already has the context of how as a culture our company is being. So, and when it comes to cluster-based approach, there is a network effect when it comes to marketing. And when we want to open a new town, there are a few parameters to look at it. Like 70% of the market should be unorganized, and the TAM of the market should be more than 300 crores. So there are 2 or 3 other parameters which we look at before expanding. So this has probably worked in our favor. Cluster-based approach, having in-house people and person not getting from elsewhere, he's native of that particular town.
And typically, what is the gold loan market size of each of these towns? Is it anywhere from 100 to 200 crores? Is there a minimum gold loan market size that you map out before deciding to open a branch?
So every town which we enter, the minimum market size would be around 3 100 crores. Gold loan market with the organized and the unorganized players. So out of
And what would be that split, Nikhil, between organized? What percentage of that 300 crores would be, say, organized, banking plus NBFC, and the remaining being your local jeweler pawnbroker?
So organized would be around 35%, unorganized would be around 65%. Out of the organized 35%, 60% would be with NBFCs, the other 40% would be with banks.
Got it. And actually, that leads me to another, surprising fact in terms of customer acquisition. Initially, we always thought that a lot of our customers will be new to organized gold loans and organized credit. But as we spoke earlier on, these are highly nuanced, educated consumers, and we've surprisingly also been able to successfully chip away share from not just the unorganized part, like unorganized moving to organized, just pawnbrokers, local jewelers moving to yellow metal, but as many customers moving away from the NBFCs to yellow metal, right? Has this surprised you, or did you initially always feel that your market share will be from unorganized to organized?
So we feel market share is from unorganized to organized, whereas we have 20% of the market coming from traditional NBFCs, because people who have moved to NBFCs, they are seeing a lot of value in yellow metal as a business proposition, which I have already mentioned, in terms of fair and transparent pricing, in terms of tech adoption. They want simple app with simple interface without charging them anything for UPI payments, which traditionally any of the companies do not.
I would like to add a little bit there. What we look at in terms of playbook is we want to go to a market that has the highest unorganized share. Our focus is to get people to get into a credit ecosystem, organized credit ecosystem, so that they are eligible for other kind of products in the future, which we could potentially serve them in the near future. But however, the first principle thought we have is to make the product simple, right? And that is not a product that exists in the organized market today at all. So there is the network effect. They try us out, whoever has got a loan from an NBFC or a bank, but definitely feel that we have a much more transparent product and eventually stay back with us. It's a business of highest retention, and if you have the best product in the market, even the organized players will feel the heat of it.
Great. So Nikhil, just wanted to come back to you and ask you about that branch expansion playbook strategy. And one of the things that also surprised us as we beginning to scale and expand is initially we always thought our first port of call and the low-hanging fruit is moving the unorganized share to organized. But very quickly we started seeing customers from the Muthuts and Manapurams also come to yellow metal, and that was largely, of course, driven by ease of tech, transparent pricing, the best in class, or not even best in class thing. These customers are never used to any kind of friendly, respectful customer service. Why do you think they so quickly started coming to yellow metal, and how surprised were you that your market share is equal towards the unorganized to organized as well as incumbents into the newbie called yellow metal?
So I would say people have adopted to UPI as a payment. When PhonePe or any UPI as a platform is providing all the payment transactions for free, why would any NBFC, like any company, would charge their customers like 10-15 rupees for UPI payments when UPI as a platform is totally free? This is one of the biggest value propositions where consumers are currently seeing. Why should anybody pay 15 rupees on top of extra interest payment when UPI as a platform is free?
Yeah. And the other thing is your width versus depth, right? What is the typical market size of these towns as you decide to expand into them? Like overall market size, is it roughly in the 250 to 300 crore type of mark? And how are you actually deciding which town you should open your branch office in next?
So we take at least a town with a population of 2 lakhs, where each town is being surrounded by at least 20 cluster villages. Each cluster village has like 10 to 15 small villages across them. So with a population of around 2 lakhs, the holding value of gold with customers is around 3,500 crores, where the market estimates say that 10% of the gold holdings should be coming for gold loans. That is how we take it into consideration.
Understood. And I was just coming back to you. I know that one key part of this expansion playbook has been that when you set up your loan managers, Nikhil has always insisted that there's one loan manager from another branch of yellow metal who then moves to this new branch and starts, in order to ensure that the culture fit as you expand the loan managers in that branch is always, rather than hiring brand new folks in that city. Take me through a little about this culture that you've set at Yellow Metal? I know that you sit in Bangalore and lead the tech team and the back-end ops team, and Nikhil's on the ground, literally traveling between these 7 towns every week, and with the entire loan manager and the branches is reporting into him. What has been really important for you as you've set out to hire and scale up on the people and talent front? And what has worked with hiring people from the old economy companies, and what has worked with hiring new faces?
When we initially started out, the good part of it was Nikhil was always on the ground. Anything that we could build, there is an immediate loop of feedback that we always got. Let's say it was as simple as, will the Google form work on a mobile phone, and will the loan manager understand what is a mandatory field, what is a non-mandatory field, to being able to roll out the consumer app and making sure our managers and consumers actually understand what we are building. And if there is an issue, that loop is coming back to us immediately right then and there. So that we continue to be very agile about in terms of collecting feedback from the ground. But what we look culturally in any person that we get on board at Yellow Metal is 2 things. One, proactivity. Not actually a lot of experience that has worked for us. The person can be as simple as being able to understand English to some extent and understand finance to some extent. And all after that is intent and proactivity is all we need. And that has worked beautifully well. Some of my favorite people in the team have these 2 things across them, not a lot of experience at all. And we continue to look for that in any new people that we hire, including technology, including operations, any role that we hire. It has worked amazingly well. To give you an example, we had a financial operations person that we hired. We were very, very skeptical when we onboarded this person because he did not speak the local languages. He did not understand gold loan as a product. He's never bought a gold loan himself in his experience ever. He kind of realized was as soon as he came on board, his intent to actually learn the product and his proactivity to actually adopt to whatever we were building. There was no process in the company at that point. Right? He was probably the 4th or the 5th employee, and he was just 2 years in the world of any corporate career that way. And he stepped up so much today. We rely on him more than anybody else in terms of reconciliations, in terms of anything finance. He's the go-to person for us, and he knows more than probably me. Right, the only other person who probably knows more is Nikhil, but he's the second well-aware person in the company in terms of business. So I think that has worked beautifully well.
Yeah, I think you've done an interesting mix of the right amount of knowledge, technical expertise from the incumbents, as well as a lot of younger, fresh pairs of eyes, but with the right amount of energy and intent. As you said, this is a very tight and close-knit team, despite working out of almost 8 locations, including Bangalore. So I think that's great work on that front. I just want to come back to this question around the scale per city and how frugally that you've been able to do it. Of course, it's almost, right in 2023 to talk about being like a cockroach rather than a unicorn and building very frugally, methodically. You're like a 20-member team. You burn very little, like sub 30 lakhs every month. Your disbursements are north of 10 crores. Each month. In fact, I know in January you even reached 12 crores a month. And I know that you're like the 2 of you, even though you're brothers, you're like yin and yang. As we always say, if we leave it to Rahul, he would have burned his way through this 500k and probably just all in just 1 town. And if you leave it to who's the financial wizard over here, he would have just kept scaling 1 town till it's unit economics until it's entirely profitable before opening the 2nd town. So just curious to know behind the scenes who gets the vote and the veto between the 2 of you, and how do you balance out this difference in attitudes and strategies? One's like, who's the tortoise, who's the hare, who's the cockroach, who's the unicorn, whatever analogies that you want to use. Yeah.
No, I'm definitely the more aggressive one between the 2 of us. That's probably because of the background that I kind of come from, right? Like I've always worked in a startup all throughout my career, and I've always seen aggression work in favor for all the startups that I have worked with. And I'm always the one who is pushing for more than what we can achieve, more than what we potentially think we can achieve. There are cons to that, like you rightly said. I think I would have burned through, particularly this idea of building Yellow Metal, we would have burned through the 500k and probably wrapped up much earlier. And I'm very certain that we wouldn't have been this balanced, and we wouldn't have been able to be one of the few raising money at the most difficult time in the funding environment today. And I think Nikhil is very, very fundamentally grounded, again, probably because of the background and the core nature of him wanting to stick to fundamentals all the time. And I'm always a little worried about that, and I do fear that he doesn't get out of his comfort zone sometimes. So we always fight a lot, not just fight, but fight a lot.
And Nikhil, if I were to ask your side of the story, What parts of Rahul do you agree with, and which parts do you both conflict the most on?
So I always believed in spend right. It's not about the aggression. I believe in spend right. I'm an aggressive person who want to expand, but before expanding, I need to have my spend in my comfort zone, or else that will not move my needle. So I always believed in spending right.
Yeah, Nikhil, we all know that you're an avid reader of annual reports, and in the last podcast as well, I remember asking you, what is your favorite annual report for 2021 and why? So have to have a follow-on question, favorite annual report for 2022 and why?
So I would say this year it has been ITC. Being when the fundamentals are right, then all the investors needs to flock in. I would say what happened in the year 2021 or 2022, what happened with ESG funds, what happened with cigarettes, what happened with FMCG, hotels. They were saying ITC should not have started hotels. I mean, right now everything is in place, all the fundamentals is in place. Fundamentals was right. Now the valuations are catching up.
Rahul, as you look forward to 2023, you've got this round, this 3 million round behind you now. So fantastic work and congrats on raising your pre-series A. And what do you look forward to in 2023? How many towns do we expect Yellow Metal to be in? What are your AUM ambitions? What can we look forward to in these next 12 to 20 months?
Actually, the biggest thing I'm looking forward to is now I'm able to convince Nikhil of a very decently big budget to technology, which we were crunched off in the previous round. Now there is enough space for exploration, enough space for building and going deeper into building greater tech. That's one thing that is a big worry that was out of my mind now with this round. The second one is definitely right people. I'm looking forward to get great people who can help us achieve to the numbers that Nikhil wants us to achieve. So I'll let the business and the AUM parts to Nikhil. I think he's better to answer that bit.
How many towns would you be taking Yellow Metal to in these next 12 to 20 months post this round? And what kind of AUM targets are you holding yourself up to?
So in the next 12 to 18 months, we'll be reaching 25, so the minimum of 20 to 25 towns. And the existing loan book would be north of 120 crores.
Fantastic. Awesome. Nikhil and Rahul, thank you so much for doing this. Nikhil, especially you. I know that you're super camera shy. You hate talking to anybody. So thank you so much for going out of your comfort zone, coming over to WaterBridge Studios this morning and recording this podcast for us. Rahul, thank you so much as well. Many congratulations on the round closure. We continue to be excited about your journey and very, very grateful for choosing us as your partners.
Thank you very much, Anjali, for believing us in the early days when we just had a pitch deck and nothing more. And it's always a pleasure coming and meeting you and talking to your folks around. So thank you very much for the belief you've had. Hopefully, we'll continue working closer with you.
Absolutely. Lots of work ahead. It's still day zero, as Bezos says, and wish you both the very, very best. We are very happy to be on the sidelines cheering you always. Thank you so much.
Thank you.
Thank you so much.
Thank you for listening to That One Idea, a podcast series produced by WaterBridge Ventures, recorded at our studio office in Bangalore. WaterBridge Ventures is a leading early-stage VC fund in India, partnering with mission-oriented founders building game-changing businesses. The fund invests up to $3 million across seed to Series A rounds. With over 32 investments in 5 years, WaterBridge has backed leading companies like Magic Pin, Unacademy, Doubtnut, Chalo, and City Mall, among many others. With over $250 million in assets under management, WaterBridge also runs India's leading seed investment program called Fast Forward. The Fast Forward program invests up to $1 million in seed stage companies with a 7-day turnaround time to all founder pitches. Head to waterbridge.vc to learn more.